Hello investors, welcome back to our YouTube channel Markets Analyzers. This is a new channel. Try to subscribe this channel, like the videos as well. And I won't mind if you share the videos with your friends as well. First, let's talk about last week recap. In the entire week, there was a huge drama around the markets. Nifty opened with a huge gap down of 1.6% on Monday. The global markets crashed like there was no tomorrow. Japanese yen carry trade was happening. India VIX single day rallied by more than 50%. In addition to all this, the weaker US jobs data led to recession fears in US. It was like the end of the world. Then gradually the market started to recover. RBI monetary policy meeting also took place. The Reserve Bank of India maintained repo rate at 6.5% for the 9th consecutive meeting in August 2024. Then US jobless claims data came. The number of people claiming unemployment benefits in the US fell by 17,000. The market expectations were around 240,000, but it came at 230,000. So it wiped out the recession fears. And I want to tell you the performance of our markets in comparison to global markets in the last week. Our market Nifty fell by 1.4% in the last week. From the peak from all-time high, which is around 25,078, Nifty corrected by 2.8%. Whereas in the last week, US markets like Nasdaq, it rallied by 5.6% and S&P 500 rallied by 3.7%. It all happened in last week only. Our markets, Nifty fell by 1.4% in last week. US markets rallied by 5.6% and 3%, but Nifty fell by 1.4%. So you might think our markets are underperforming global markets. No. If you look at fall from peak levels, Nifty fell by 2.8%. It means from all-time high. Nifty fell by 2.8%, whereas Nasdaq fell by 11.5% and S&P 500 corrected by 6%. So, if we compare the market's fall from peak, Nifty has fallen barely, I would say, just 2.8% fall. Even after such a dramatic week, our markets barely corrected. Why am I telling you this? Is because our markets are looking structurally very strong. So we should not panic as soon as there is some negative updates which might drag our markets down in intraday. If you are looking markets for long term, then all these corrections are an opportunity to buy. Next, let's talk about key events to track in this week which can impact stock markets. There are two notable events in this week which will definitely impact our stock markets, and both are coming from US. The first one is inflation data for July month, and the next one is retail sales data. Inflation data will be released around 6 p.m. on 14th August, which is Wednesday evening. It will impact our markets opening on Friday, because on 15th Thursday our markets are closed. The inflation data will come on Wednesday evening, and Thursday is market holiday. It will impact our markets opening on Friday. The expectations on inflation is around 3.1%. So if inflation comes above 3.1%, it is negative for markets. If inflation comes below 3.1%, then it's positive. On next day, 15th, retail sales data will be released in USA. If it is increasing, means it is positive. Inflation should fall, retail sales data should rise. The impact of both these data points will be seen on Friday's opening. Along with that, HDFC Bank MSCI index rebalancing news will also come out. So these are the major events to track in this week. Next, if we talk about FII's positions in index futures and options, there is not much activity from FIIs. It is very minute, so we can consider FIIs as neutral. They are not taking any sides strongly as of now. Next, moving on to option chain. In next weekly expiry, the resistance is at 24,400. There is very significant ratings at that level. On Friday alone, 61,374 new writings have taken place. So the traders are believing that this level will be the resistance for the next week. If this level breaks, then 24,700 could be the next major resistance. If you look at supports, the support is present somewhere around 24,300. Even the support is also very close to current trading levels. If you observe one thing, the support is at 24,300 and resistance is at 24,400. The support and resistance is according to option chain ratings. The difference between both of them is just 100 points. Now, come to Nifty chart and see the Friday's candle. On Friday, Nifty formed a doji candle. Doji represents indecision. It means the traders are not deciding which direction to take place. They are in kind of middle. If you look at the high and low of the doji candle, the high is around 24,419 and low is at 24,311. Friday's high and low are approximately around the option chain support and resistance. Keep this in mind and look at Nifty levels. The support is around 24,330 zone and resistance is at 24,420 levels. Now what I am going to tell is just purely my personal view. Don't blindly believe in me. Do your own research before taking any decisions. If this doji candle, if it breaks upside, let's say Nifty in daily time frame, if it closes above 24,420, which is doji candle's high, it means Nifty can move further upside up to 24,650 levels, somewhere around 24,650 to 24,700 is what I think. If Nifty closes above 24,420, then come to option chain and check whether shorts at 24,400 levels in call side are covering or not. If they are being covered, then it's another confluence factor. If Nifty closes below the doji candle low, which is around 24,300 levels, then I'm expecting Nifty to fall towards 24,000 levels and do the same. Check whether long unwinding is happening at 24,400. The long unwinding is happening means then it's another confluence factor which might give us some confidence to take positions on that side. So friends, clear, right? I hope the explanation was good. Only if you found the content informative, like the video and subscribe to our channel Markets Analyzers. Do comment the type of videos you want in the comments. I will come back again with another interesting video. Until then, have a great time.